Question of the day. Are we done? Are we done with the war in Iran? Are we pencil in hand, document in hand, agreement in hand, verification of authorization from the Iranian leadership? Is the White House, have they received the terms they want, the conditions they want? Are we done with the Iranian war? Or is this a day by day pandemonium and based on media reports and hopes and prayers that this particular war and all the economic consequences are gone? Hey, look, I woke up 2 days ago and I saw the price of oil drop from $100 a barrel to $89 a barrel today. Is there a chance by the end of this trading month, by day after tomorrow, that we see oil prices down around $85 a barrel? Oh, absolutely. Is there also equally a chance we could see oil prices jump back to $100 to $105 a barrel by Friday? Equally possible. What's happening is everyone that I listen to and all the fact finders that I can find have not said one common thing that agree collectively together. It is, well, I'm not worried about Iran and the war because there's some hidden soft barrels in storage. There's barrels in pipelines. It's going to be a very quick ramp up. The production that was lost will be back to daily demand versus supply equilibrium. We'll find out very quickly that those lost barrels the last 90 days, that's just excess storage. We can rebuild storage over the next 2 to 3 years without disrupting the market. And it goes on and on and on. Look, they have former energy sector secretaries online. They have Kudlow making his commentary. They have generals on talking about the war and when it's going to be over. They have every expert they can find providing what they believe is going to be the outcome. Here's the reality. We're dealing in a situation where the people that we have been at battle with, the United States has been battle with, the Iranian regime, they have a different way of thinking than we do. They don't care about time. They don't care about putting money in retirement. They don't care about the cost of their bonds. They don't care about the cost of their next real estate loan. They don't care about stock market returns. They care about an ideology that they will be willing and they are willing to die for. We are probably going to see some type of a ceasefire that's permanent temporarily. And I say permanent temporarily. What that means is, I think the president, the White House, and the military and everybody involved in the cabinet, they're trying to figure out how do we get an agreement that looks like we didn't fail. It looks like we didn't acquiesce and give in. And yet it looks like we can call this over from a military standpoint, even though the fallout from the standpoint of additional supply disruptions, global threat, terrorism, not only in the Middle East, but in other parts of the world. How does the president, the White House, and his cabinet think about what is the public going to think about an Iranian war stoppage unless a certain level of items are achieved? What's the checkbox? No nuclear arms and this, and the strait opened up, and you're going to behave, and you're going to do this. And if you do all these things, we will release X, Y, and Z as far as terms and money, sanctions, etc. Here's the problem with that. It doesn't take into account real economics. Real economics are the facts. We've lost about 1.5 billion barrels in total production supply for 90 days. Maybe that much, maybe more. We disrupted the supply in terms of actual production output from the wellheads. They've cut the wells back, they've shut wells in. We now have new areas of the world that are reopening production, like the platform off California. We're talking about the North Sea. We're talking about Brazil's opening up valves. We're talking about Argentina's trying to crank up. Venezuela's up 500,000 barrels. And all that is really, really good, except for one thing. If all those areas made economic sense at $70, $75 a barrel or lower, they'd already be open. So the reality of the economics are that we now have established that there are only certain numbers of barrels of oil that are available today. There's only a certain number of barrels of oil that can be produced around the world at a certain price and value. And there's only certain barrels that are going to be at a level of risk or a premium to risk that's going to monetize and is going to differentiate oil from different parts of the world in terms of final transportation, receiving end customers. Look, the Iranian war is something that is brand new to everyone in terms of what it did financially and what it did in terms of raw material transportation, import, export, coming through a certain part of the world in the Middle East, and specifically the Strait of Hormuz. There is going to be all types of solutions that are going to be created as a result of this 90-day shut-in. And that solution and those solutions that are created are going to be things that are either going to be permanent, hopefully, or they're going to be temporary until what happens? Base economics. Let's go build a pipeline. Let's go to a different direction. Let's go to the Mediterranean Sea. Let's go somewhere besides the Strait that we'll never have to have that problem again until the terrorists and those who don't care about modern Western civilization and economics decides, well, let's go ahead and help them have a little bit of risk in that pipeline by blowing a hole in it. Let's figure out how we can disrupt production in other parts of the world. We now know that the tool of the greatest strength by the Iranian regime is economics. Economic disruption has made every single player, every country in the world, every transporter, import, export realize one thing. We only have 60 days from the time we produce at a wellhead until we have a panic that we don't have enough supply. Fundamentally today, oil is at $89 a barrel. I look at the last 2 days of the trading month. I doubt very seriously we're going to get back up to 95 or higher for this reason. Traders felt like at the beginning of the month, beginning of May, they felt like there was going to be a massive shortage of supply. It's my guess they traded and secured those physical barrels really early in the month. They were trading heavily from probably May 1st until probably like May the 18th. The last 4 or 5 days over Memorial Day, the president and the White House put out all kinds of information over a 4-day weekend that basically said, we're going to have this deal solved and the contract and the agreement is going to be signed and executed. And so the markets felt like we have enough oil bought at the beginning of the month. We don't have to trade as aggressively. We can allow the price to come down and we can buy the remaining physical barrels that we have to honor in our contracts. We can buy that at a cheaper price. Well, that's great, as long as the physical barrels match that kind of sentiment. If we discover tomorrow or we discover Friday, the last 2 trading days of the month, that effectively we don't have enough physical barrels and there is a surge or a massive opportunity to seek those barrels for meeting those contracts to deliver physical barrels to actual customers, you can see oil jump $10 to $20 a barrel in the next 48 hours. I personally believe that's not going to happen. I believe what's going to happen is we'll end the month somewhere between $87 and $94 a barrel, depending on that little number that I have no clue how to figure out, which is what that supply-demand differential is for this month's consumption and delivery. But coming around June 1st, next Monday, is a whole new ballgame. If the president doesn't secure something in the next 7 days, it's like the little boy who cried wolf, and no disrespect to the president. You keep telling people you have an agreement. A month ago, you said, I have to have the Strait opened up, using curse words. Today, it's like, I'm not in a hurry. I want the agreement to be exactly what I want it to be. So is it that everyone has kind of accepted the financial pain of a shortage of supply oil? Has everyone accepted that gasoline prices are almost double and that jet fuel's in short supply and that we have this massive disruption in logistics? Is everyone just accepted that and said, well, at least now we know the scope? It's somewhere between $89 today and as high as $119 a barrel. And as long as we're on the lower end, we're willing to be patient to see if we can eradicate and neutralize this terroristic regime. Maybe so, maybe no. But what would it take to really drop the price of oil back into the 60s? I think you could easily see the price drop in a year back down into the low 70s, top 60s, because all these extra supply sources coming online, they're not going to just shut the valve and go, well, we tried, game's over, let's just turn off all the valves. No, they're going to try their best to fill the supply void, let the extra supply that came on the last 90 days help fill up those storage tanks, those pipelines, get the supply of those soft barrels back in those containers. And when that's done in 12 to 24 months, those sources become uneconomical. Now we're back to point of sale. Now we're back to 101 million barrels a day of demand and 101 million barrels a day of supply. Now you're back to par. The question for the day is, what does par look like in terms of the price of crude oil on West Texas Intermediate, or what does it look like when it comes to Brent crude? I'm going to suggest that par, once we have those soft barrels back in place in the next 12 to 24 months, if the Iranian war comes to an end in the next few weeks, which it might, maybe not. If that's true, what does par look like? I think par looks like about a $10 to $15 a barrel cost higher than before the war started. Before the war, we were at $66 a barrel. I can see us between $76 and $85 a barrel post soft barrel replacement from reserves coming from other sources that otherwise were not economical. I want you to know I'm only one guy with one opinion, but I'm looking at every angle I can figure. And what I'm doing is I'm discounting all these individuals that are on TV, that are being paid, preaching about how we ought to buy the stock market, we're all okay, the economy's great. To me, it's all about waving your hand like you're trying to hide the rabbit inside the magician's hat. They don't want you to see the facts because they don't want to run on the bank. They don't want people selling assets. They don't want you not participating in stocks. They want you to support those 7 tech stocks on the Dow. That's all great and fine and dandy, but if you peel away all the icing and get down to the cake, what kind of cake do you have? That is what I look at. I'm looking at the cake. I'm looking at the content, not the fluff. And today, for me, I'm leaning toward a $87 to $94 barrel kind of average between now and Friday, 2 days from now. I believe we could have a pretty robust June. That means north of $95 a barrel, but it all depends on what comes out of the White House. We're headed into another 3-day weekend. We come up to Father's Day. We got everybody taking vacation. Everybody's got kids out of school. We know that the traders are really running the show, not the oil companies. We'll just have to see how it ends up for the month of May.